So Safeguard's somewhat of a chameleon, able to move as the world has moved. We've transformed our portfolio of businesses, higher growth, higher valuation metric, lower CapEx requirements. Our companies, 17 of them, over the last few years have grown from $100 million in revenue to approaching $350 million in revenue. Now, those are 3 tough years to get that kind of growth. In the last period of this economic disruption, we've seen many strategic buyers sitting on huge war chests of cash and reluctant to put them to use. This past quarter, I think we've seen what we believe is the beginning of a continued trend of loosening the purse strings with large strategic buyers. They can't sit on all that capital forever and get no return on it without finding some way to return value to shareholders. Going forward, we think that the exit machinery, heretofore broken, is loosening.
Our value proposition, as you'll hear throughout the course of the morning, is that we not only provide capital, but we provide a back office accounting, legal, communications, HR, IT infrastructure support services that can augment the staffs of our partner companies. It allows for some best-of-breed thinking that can be brought to bear quickly. It allows us to augment, not replace the staff that the partner companies have. It allows our partner companies to potentially delay the incurrence of a fixed cost by being able to leverage our infrastructure for some period of time until they've gotten to a point where they believe that that fixed cost is warranted within the construct of their business operations.
The center of gravity in the internet space is literally moving a bit west to the east. We're seeing frenetic startup and growth activity in companies in New York specifically, but we're also seeing up and down the East Coast. And it's moving from Silicon Valley to here, and I started to think about that, and I was a venture capitalist in Silicon Valley for a number of years before joining Safeguard. And one of the observations I remember making then is, boy, in California we have all the talent, marketing talent, engineering talent, lots of CEOs who can run these companies, but we're missing one key ingredient, and that ingredient is customers. Right? The customers are generally on the East Coast. Our companies can literally have their customers, take a train to them, or they take a train to their companies. It's a real advantage, and it's a real benefit for Safeguard as we're focused primarily on East Coast companies. The exciting thing about healthcare IT is we're moving out of the analysis phase of healthcare reform, and we're starting to move into the pilot phase and the implementation phase of the changes that the companies are going to make, both on the payer side, the provider side, and all the supporting industry. That's really beneficial for us because when analysis doesn't help us, pilots don't help us that much, but implementation of the new changes that are going to happen, whether it's reimbursement reform or different relationships between payers and providers, are all going to benefit us significantly as we see new opportunities.
The problem that we solve in the marketplace is prevalent, it's visible, it's headline news, top of mind. Physicians face continual downward pressure on their reimbursement. They face the need to continue investing in new technologies to manage their businesses and handle the reimbursement process. Our solution gives them, A, the freedom to focus on their practice as opposed to the business of medicine, provides them more money faster, so we increase and accelerate cash flow for their business. We, in large part, shift the regulatory burden from the practice to ourselves, and we give them ample protection because we can afford a compliance infrastructure that they can't. Regardless of the size of the market, giant and growing, it's still, from a competitive standpoint, highly, highly fragmented. Highly fragmented. So you've got about 2,000 companies that we compete with, of which the average company generates less than $4.5 million a year in revenue as compared to our $33 million a year in revenue. The largest company that we compete with doesn't carry 5% market share. So highly fragmented, and we're an exceptional consolidation vehicle for those small businesses.
We created a category about 3.5 years ago called the demand-side platform, and remain the market leader in it. It's a huge market, so we're seeing a lot of change in digital marketing, obviously, as dollars are shifting from offline to online. We're representing all major agency holding companies, operating units within that, one of our primary distribution channels, and through them, dozens of the Fortune 500. We have a self-service platform called Terminal One. Really think of it as a Bloomberg of marketing, an application that sits on the desktop of the media planner, buyer, or the marketing services professional sort of entrusted with making an American Express or a Capital One or a General Mills more effective. Really using analytics and using data in order to sort of break down the old saw of the Wanamaker quote of 50% of my advertising was wasted. I don't know what half. We're getting to the point where people are truly able to understand the impact and the efficacy of marketing spend across all of their audiences.
If you look at our business, you could consider us in the early days to be what eBay was when they actually launched into the collectibles space for auctions. Or we are like what Amazon was when they launched their business in books. Our vision, our strategy goes way beyond media. We're actually looking to enable activity that has occurred for thousands and thousands of years that is done by hundreds of millions of people around the world. We are the leading media swapping marketplace. And as I said a few moments ago, we're now endeavoring to move into other categories like women's fashion, and we have others that we're planning as we roll out more in 2011. Swapping is an interesting, it's an interesting metaphor. Unlike an auction where someone wins and many people lose, when you're swapping something, you're actually getting rid of something that you have to get something that you want. So the key here as a goal for us is building our consumer brand is to enable the thrill of that activity. We charge a transaction fee for enabling the swap. We also, if the member would like to buy shipping from us, we also resell U.S. shipping.
The IPO market appears to have opened up for life science companies. We've had 10 IPOs of life science companies going public this year, including 2 from Safeguard, NewPath and Tengion. Clearly, IPOs are more of financing events these days. They're not a liquidity event. There still is uncertainty in the markets today, particularly around the healthcare reform with the elections next month, the FDA process, the regulatory process, and reimbursement. We believe we've got a team of experts and consultants and advisors that can help us get through this process, so when we're putting capital to work over the next 3 to 5 years, those companies will be well positioned for exits and will have de-risked or minimized some of the risk for many of those investments. Andrew Witte, the CEO of GSK, is a friend of mine, and he recently said in the last couple of days that he believes that 9 out of the top 15 pharmaceutical companies in the world today will wither or go away in the next decade, that their pipelines are not strong enough to support the growth, and that they will be forced to consolidate or merge. And the way that they are going to compensate for that or grow is they're going to go very active in M&A. We think that will play well to many of our companies.
Our projected 2010 revenues will be in excess of 130 million. We truly have a unique miracle medicine here, a product called Dermagraft, and I'm going to show you a short video on that in a moment. But it's a living cell product, FDA approved, treating a disease, diabetic foot ulcers, that I'm going to also explain a little bit more to you, that is truly an underserved market and unfortunately, as we all know, a growing market. We're going to produce 100,000 pieces of Dermagraft this year. It's just a phenomenal number. I can't think of another cell-based product that it gets produced in that kind of quantities. So how are we going to build a major business out of that? We take all the cell-based expertise and we have a 5-point growth plan. The first part, where we have our FDA indication, is the diabetic foot ulcer market. We're probably at about a 6% penetration in the US currently. So we're just getting going in that market, driving the standard of care message. The second part, and I'll show you a slide on this, is to go after the venous leg ulcer indication. Same product, same call point, because many of those patients are seen in these wound care centers where our reps are calling anyway. We're about 80% enrolled in that trial, hope to have that on the market by 2012. Then we've got to look at how do we take this product outside the US. So all of the numbers I've shown you so far are within the US. When we bought these assets from Smith & Nephew, we also inherited a second product, TransCyte, for burns. Not a large commercial market, but we've been spending time with the US government thinking about how could this product be stockpiled in the event of major disaster-type issues where we get significant number of burns. In fact, the case study they use, if the towers hadn't collapsed in 9/11, there is no way the medical system would have treated thousands of severely burnt patients. So a complex sales cycle, but we're making progress there. And then finally, our goal is to take all these competencies we've assembled and say, what else can we purchase or license in to build a major, commercially oriented, profitable regenerative medicine company?
If you ask migraine patients today who are being treated, 4 out of 5 would raise their hand and say, I would readily try a new option if given the opportunity. This is what NeuPath is all about. Zelrix is a transdermal patch. Basically what a patient does, they take the patch, they put it on their upper arm or their thigh at the first sign of a migraine attack, just like they would treat with a tablet. They push a button in the center. They're in control, which is a very important element for migraineurs. It activates the patch. It operates and delivers drug over the course of 4 hours at a very controlled rate. At the end of those 4 hours, patch shuts down. Patient can take it off at the time of their convenience. They simply take it off and throw it in the trash, which was very important for patients as well. When you think about migraine, think about the working population. And so think about the impact it has on employers. 1 in 4 working Americans experiences migraine. So for an employer, what does that mean? A lot of migraineurs miss work, but more common, they show up to work and close the door and they're unproductive for that day. So it has a major, major impact on the employer groups. Costs society about $13 billion in lost work days and productivity. We have other technologies and other product candidates to follow up, which follow that same story of identifying unmet needs in the central nervous system diseases and addressing those with novel products.
We're in the pre-pregnancy carrier testing business, but maybe a better subtitle would have been for this. This is actually a real commercial application with short-term revenue opportunity for genomic sequencing. We're in a very large market, the $4.7 billion molecular diagnostic part of the market. Physician demand, which is always important for these things, whether it's 92% or 80%, we know that a lot of physicians are interested in using a better test. We're selling from our own laboratory, and we're giving it the result pre-pregnancy, so nothing bad happens. You just find out whether you're a carrier or not. If you find out you are a carrier, you've got a lot of choices you can make. You can decide to, I have a 1 in 4 chance of having a child born with that disease. I'll take my chances. You can opt out of getting pregnant altogether. You can adopt, or you can go through an in vitro fertilization process. And there are numerous things you can do. We actually think we can take the $18 million we raised and be on the market next year, and we're hoping we don't have to raise any more money for that particular application. We're going to be using a sequencing platform that has a really, really low cost. So when you hear about the cost of having your genome sequenced at $10,000, I will tell you our cost of selecting certain genes and then sequencing is way, way, way below that number. We want to be the go-to partner for these fertility clinics for carrier testing.